Hi, everyone. I'm Ivan Bayuki. Welcome back to Wall Street Silver. Today, we have a very special guest, Dr. Marc Faber, the editor and publisher of the Gloom, Boom, and Doom Report. Thanks for joining us again, sir.
My pleasure. I'm not so sure it's very special, but
No, it's
let's see
always
what we can discuss.
it's always special having you on. Dr. Faber,
Thank
we
you.
keep hearing about how the Fed keeps propping up the markets, and you've called it a cancer. Has the Fed created a cancer? Will they ever even taper?
Well, this is now really a complex question because the Fed, of course, is keeping rates negative, but they are assisted by other central banks. I mean, I think the Fed is deliberately hurting poor people because in times of rising prices, people that get a salary are hurt the most, and people that own the assets, wealthy people like you and me and Jim, we are benefiting from rising asset prices. You understand? Anyone in the financial market, whether you're a really dumb announcer at CNBC or another TV station, you benefit from rising financial markets because that generates interest, and so there are more viewers on TV and so forth. So everybody's cheering up the Fed and says, great, more, and so forth. But the people that get hurt are housewives that do essentially or are faced with rising prices that vastly exceeds the wage increases of their husbands or their own wage increases. So they are being squeezed. And this is, in my view, almost a criminal activity. But even the greater criminal than the Fed is the ECB. In the ECB, we never had this negative real rates. In other words, for those viewers who don't understand real rates, you have a rate of inflation, say 5%, and you keep interest rates at, say, 0, then the negative rate is 5%. If inflation is 8% and the rates are at 0, then the negative interest rate is 8%. This is what you lose annually in purchasing power holding cash. And both the Fed and the ECB and other central banks, the BOJ and the Bank of England, they know that inflation at the present time vastly exceeds the rate of interest. But they keep on this policy. So tell me, are they simply dum-dums
No.
or incompetent, or are they deliberately hurting poor people?
Well, I mean, that what you bring up with the ECB, the European Central Bank, they've been even more aggressive than our own Fed in the United States. I mean, I'm sure you've seen this graph of the ECB's balance sheet. Every single week it goes up, another $50 billion, it seems like.
Yes.
Wouldn't countries like Greece, if they stopped doing this, that's the trap we're in. If they stopped doing this, Greece, Italy, Spain, they'd all implode. They can't handle it, right? They need this right now.
I don't know whether they couldn't handle it, but the interest rates would be much higher, and at least temporary, there would be some economic issues. That there's no question about. Yeah. But we have to look at the long-term damage that this policy causes, and this is the important point. And there, the ECB is, of course, first of all, I have to give you some background. Lagarde, the president, Mrs. Lagarde, she's been convicted of fraud already. So this is what happens in the political sphere. You are convicted of a crime, And what is the punishment? You get promoted to a higher position. But this is true.
That's true. Yeah.
Ordinary people, if you go and rob a store, unless it's in New York and in San Francisco, where you probably get the Medal of Honor for having robbed the store, but in most places in the world, and in the Middle East in particular, you get punished very hard. But in politics, in the US, in Washington, I just had to laugh today. Biden, he sanctioned a Serbian politician for corruption. Can you believe that? Mr. Joe Biden sanctions a Serbian politician for bribery.
Do you think the Fed will raise rates knowing the consequences that will go with it, or will they always find an excuse?
I think if I look at the events of the last 2 years, August 2019, we had a tightening in the repo market. And at the end of August, the Fed, after having been reducing very gently, I mean, hardly noticeable, after having been reducing the balance sheet for about a year, they started to print again, with the result that already by November 2019, the balance sheet of the Fed had expanded again to a new high, long before COVID. But then came COVID, and that provided a perfect excuse for the Fed to print and for the government, for the state to intervene and to essentially pay people salaries and subventions and expand the budget deficit. And each time you have an enlargement of the government, you have a slowdown in the general economy, and you have more government interventions and less freedom. That, I mean, should be obvious to anyone that lives in a democracy. The bigger the state is, the less freedom you have. The more money the government gives to you in subventions or in basic income or whatever, social security, the more power they have over you by any measure, even by the dishonest measure of inflation as calculated by the government. Inflation is running at, say, 5%. Anyone who goes shopping, anyone who has any business transactions knows that inflation is higher than 5% per annum at the present time. I don't tell my wife because she will ask for a huge salary, but I know it. And so I don't want to broach the subject in my family. Here I can say it. And so let's say by an honest measure, inflation, in my opinion, is between 8 and 12% per annum at the present time. Now, what has happened with the euro? The euro has been weak against the US dollar, correct?
Correct.
Yeah.
By 4% last year, or 5%. So do you think that inflation in the Eurozone is lower or higher than in the US? Because of the euro weakness, it has to be higher, has to be higher. So we have strongly negative interest rates in Europe, strongly negative interest rates in the US. And to bring interest rates to more than zero in real terms would imply that the Fed would have to increase interest rates from essentially zero, where we are today, to say 6%.
Yeah.
Do you believe the Fed? Just look at this Jerome Powell. Just look at him. Do you think he's going to go and increase interest rates to 6%?
No.
No.
Never in eternity.
The housing market would probably implode. What would mortgage rates be if the Fed funds rate was at 6%? Mortgage rates would be 8%, 10%. and then the housing market implodes. But that becomes the question: how do they stop? How do they stop inflation this time if they can't raise rates? What
In
did
my
Paul
opinion, they
Volcker
can't.
what did Paul Volcker
Can't.
raise rates to? Paul Volcker had to raise rates to 20% to stop inflation that was 14% back in 1980, right? So what do they do this time? I mean, if they can't raise rates because of the debt and the housing market and the stock market, how do they stop inflation?
In my opinion, there's no way out. They have to keep on playing the game. In my view, will you and I and all investors should know that for the near term, to hold cash, say you have $1 million US, you hold it all in cash. In a year's time, the value is less 5 or 6%. Someone may say, well, I hold $1 million in cash and I lose 6% per annum in real terms. But if I hold stocks, I may lose 30%. Correct. This has happened to all the dumb meme stocks investors who were hailed as the new prophets of the investment community, that knew better than people who are value investors, who knew better than people who have experience. All these Robinhood crowd members and Reddit readers, they bought AMC, GameStop, Zoom, and so forth. Most of these stocks are down more than 50% from the highs, more than 50%. The IPO market, more than half the IPOs are underwater.
Yeah, this is the Fed funds rate going back 20 years.
Yeah.
And you can see this is, the Fed playing with interest rates. And then we were down at zero for many years after the financial crisis. And then, Trump came in and they tried to raise rates here. And this is where the market in 2019 was having problems around 2.25%, 2.5%. And they had to drop it back down to zero. But you see this trend as we've gotten more and more leverage, more and more debt in our society, the ceiling becomes lower each time of what they can raise rates to. And I'm just finding it really interesting that the market this is what the market is anticipating right now, what it's pricing in, what they're showing here. I guess this is the JP Morgan chart. It's why do they think
to 2.5% in 2025 or 26?
Yeah, how does that make sense? I don't. I mean, how much debt we're going to be at 40 trillion, 45 trillion in debt in 3 or 4 years. I don't know how they think that this is going to happen.
But you don't understand.
Yeah.
Please, an old economy guy. You don't understand the modern monetary theory. You don't. Biden, he understands he understands the most modern monetary theory. This is in order to reduce inflation, as Mr. Erdogan of Turkey has said, you need to print more money.
Yeah, Dr. Faber, there's internet outages and fuel price rising to record highs in Kazakhstan, and massive protests are breaking out. Did you believe we'll see more of these situations as inflation surges worldwide?
Yes, I believe that as long as home prices go up and stock prices go up, everybody's applauding because the illusionary wealth increases, including mine and yours and everybody who owns shares and assets like gold and silver and bitcoins and so forth. But once household consumer prices go up, that is the trigger point throughout history where people rebelled and were angry at the government. That food prices went up and so forth, led to unrest in the Roman Empire, in Egypt, in everywhere in the world. And I think that this will lead also in the US to some disturbances, in my opinion. But you have to understand, you have in America a genius as a president. What he will do, he will distribute more money to, he will increase the basic incomes and so forth, and he will reduce further the police force, which is a proven in the modern monetary theory and modern societal theory, a measure to reduce crime. You eliminate the police force. That is the best way to eliminate crime.
Yeah.
And you put in judges that for them, there is no crime. Everything is happening because someone has been victimized.
You know, and with all the chaos going on in the world, the economic systems, you know, the decisions that the central banks are making, we're seeing a lot of other central banks, whether it's China, India, and individuals, start hoarding gold. Other central banks are buying tons of gold. Are you surprised that gold has not really responded, the gold price, that it's not behaving as we would expect, given everything that's going on?
I have to say that this is a mystery for me, that gold and silver and platinum as a store of value, are not much higher. Because if you told me, Mark, for the next few years, it is unlikely that we will have real rates. I have to say here, there is one situation where you could get real rates up substantially from, say, currently -6% to 3%. And that would be a general collapse in everything. You know, the oil prices collapse, the economies collapse, everything collapses. What would the response by central banks be? And then you realize as soon as there is a minor disturbance of asset prices, they will step in, like in August 2019. There wasn't a big problem in August 2019. There wasn't a financial crisis, but the Fed stepped into the repo market and they started to print money again. And if the stock market drops 10, 20% here, in my view, tightening will be out of the question. And I have to say, I think that anyone, but I've been saying this for the last 40 years, anyone has to be his own central banker and hold some precious metals physically. And for the more speculative minded investors, or in addition to holding your core position in physical precious metals, you can hold some stocks, mining stocks that have, of course, a very significant upside potential if the bull market in gold has begun.
Gotcha.
I mean, we had a bull market until about 1.5 years ago, then a correction period. I think the correction period has come to an end, and we are again in the bull market. But the bull market, I have to say, is not as powerful as I would have expected. Yeah, you can see here very well on this chart. We had a correction now since September 2021 down here. And I would say it looks as if it's going to break out on the upside.
Yeah.
It looks, but who knows?
Yeah. Is there a specific price point for gold that you're watching for in US dollar terms that tells you the bull market's back on?
Well, you have there a triangle, okay?
Yeah.
We have to breach this peak here.
Yeah, we got to get through here.
Yes.
A lot of people think, it's getting back to the high 1800s, getting above this mark that we've got this clearly defined downtrend. We got to get above this spot right here to really be back on. Would you agree with that?
Yes.
Yeah.
I would agree.
Yeah.
But I have to say, in an environment of so much money printing, and that I have to add, inexperienced investors, I'm not so sure that technical analysis is of great value anymore.
Mm-hmm.
Every stock I ever buy, I look at the chart.
Mm-hmm.
I like stocks that have a long saucer bottom. Here, I suspect that this was a correction period here from the peak down here, that this was an impulsive upward move here
Right
to the
here.
peak.
Yeah.
And then here a correction, I suspect. But it hasn't been confirmed very clearly, in my opinion. And it's interesting what you do with the chart, because by manipulating the chart, it looks totally different.
Yeah. Now, are there any other commodities that you're really watching right now? Like copper, for example. We've just had the election in Chile of a radical left-wing communist government. And they want to redo their constitution and start going after the mining companies in Chile. And that's the major producer of copper in the world. Are there any commodities like that you're watching?
If I had to look at a commodity that is very inexpensive, I would say agricultural commodities are still very cheap, inflation adjusted. Wheat, corn, soybeans, sugar. And we had a bull market in coffee, but cocoa hasn't gone up a lot. So I think there are peripheral markets that are still attractive. And I have to say, recently someone sent me a highly important report about what clean energy does to the demand of energy. You understand?
Yes.
If you want to go and produce all your energy needs with windmills, now just think a little bit clearly. What kind of a society would believe that you can generate enough windmills to power on your energy needs? For that, you need people that are completely illusionaries, like the green/communists. They want green energy, but they don't want uranium, because it doesn't fit into the picture of a clean world, uranium. But say you want a clean world, go uranium. But they want windmills. Windmills will produce energy, but they pollute much more than oil and gas and even coal, because of the construction cost and the maintenance cost of the blades. The blades and the whole building of a mill is very expensive. Ditto for solar powers. What is the name of this transportation minister in the US? Buttigieg, the one that is married to another man.
Buttigieg, yeah.
Yeah, because he needed maternity leave when he adopted some children.
Yeah.
I mean, you have to see a society that gives to someone who adopts child, a man, maternity leave.
Yeah.
And he's a minister of transportation when the bottlenecks everywhere and shortages, and he needs maternity leave. But this is the government that democracies create. Low class, ignorant, and arrogant. When you're a minister, you should accept some responsibility to do the best of what you should be doing. You are responsible for transportation, including ports, and trucking and so forth. And what do? You take maternity leave.
That is true.
Was the best joke for me in 2021. I hope it will be exceeded in 2022, because I was always worried when Trump wasn't re-elected that I would have less opportunity to laugh, because basically with Trump there was always something to laugh. But I have to say, this administration has exceeded anything that I've ever seen in US governments. You know, he says, well, if oil prices go up, don't worry, just change to an electric car. But he doesn't realize, or doesn't know, or lies, maybe the three of them, that of course, if oil prices go up, if natural gas prices go up, if coal prices go up, the price of electricity also goes up.
And the price of the battery metals, everything to make an electric car is much higher.
Yeah, and then nobody has calculated what the cost will be of essentially the disposal of the batteries.
Yeah. Well, I'm sure you're aware, Germany, we were talking about politically, they seem more inclined towards solar and wind. And Germany just shut down 3 of their nuclear power plants, half of their nuclear, in the middle of the winter, in the middle of an energy crisis in Europe, no less.
Yeah, I'm telling you, the Europeans almost are on the same level like the US government. Also, they blame Putin for not supplying gas, but then they don't want to open the pipeline through which he could supply the gas.
Dr. Faber, thank you very much. We really appreciate your time and you joining us. Our audience loves to hear from you.
My pleasure.
And we look forward to talking to you again in the next few months as 2022 develops.
Okay, great. Before I close, I just wanted to say this to your viewers. I wish them all the best in 22. And I think the investment markets are now at a very crucial transition point. If you look at the tech stocks, they're weakening, the meme stocks are weakening, even cryptos are weakening. So the speculative sector, the highly valued sector is coming down, and value stocks seem to be coming back also in emerging markets. I've observed this all over. So I would be very concerned about indexes, you know. I think they could be weakening, but within the market, there will be lots of stocks that are today perceived as old value stocks that could come back and reward investors. In other words, active management should reward investors.
Thank you very much, sir. I'm sure our audience will be paying attention.
Okay.